Hi, thanks for joining us today. My name is Ryan Muir. I'm a realtor in Denver, Colorado with the Wendling Group at Your Castle Real Estate. And I am joined today with Christin Richardson, loan officer at Castle and Cooke Mortgage. I wanted to meet with Christin today so that we could hear straight from the lender's mouth on how to start the home loan approval process. And this would be for anybody looking to buy, first-time buyers, experienced buyers. Let's hear it straight from the lender's mouth on how the process works and what we need to do to get started. So Christin, thanks for being here with me today.
Thanks so much for having me, Ryan.
Yeah. So if I'm a buyer in Denver, where do I start to get the pre-approval process going?
So the first step is they're talking to you. You're going to start meeting with them. You're going to kind of give them an idea of price point for what they're looking for, how many bedrooms, that kind of stuff.
Mm-hmm.
So that way when they call me, you're going to give them my contact information. They're going to call me. We're going to have a brief 15-20 minute conversation. I'm going to ask them what price point they're looking at, those kind of things. And then they're going to have maybe a 2-year history of where they've worked, where they live, what they make, what they have in the bank, how much they're comfortable putting into the transaction, and then what their monthly payment they're expecting it to be. So we're going to have a very open conversation. Then I'm going to talk about, taking a look at their credit. I know a lot of people are like, oh, don't put my credit, but that's a huge important piece of the loan buying process, is because we do need to know what debt you have and what your credit score is. So based on all of that information, I'm going to release what's called a pre-qualification letter. That pre-qualification letter is just based on their verbal information. The next step is I'm going to send them an email with a list of all the documents that I'm going to need to move them into the pre-approval letter process. The pre-approval process is what's going to give them the green light to go house shopping with you. And that pre-approval process, it's just 2 years tax returns, 2 years W-2s, 2 months bank statements, 30 days pay stubs, all those kind of documents that they should have accessible anyway.
Okay, fantastic. And how long does the pre-approval process, once you have all of that documentation that you need, how long does that take to get the actual pre-approval green light to go?
That's a great question. So typically I tell people once they submitted all the documents on the list to me, it'll take me about 24 hours to then turn around and give them that pre-approval process or pre-approval letter.
Wow, that's pretty quick. And then what do you base, if I'm a buyer, what do you base my pre-approval amount on?
So there's a few different factors in what I'm going to base it on. First is going to be the conversation that we had. What you're comfortable making as far as monthly payment, or what your price point is. How much house are you looking to buy?
Mm-hmm.
And then the second is going to come down to looking at credit. How much debt do you have? How much home can you afford? So there's going to be 2 different pieces. If you tell me that you only want a $2,000 a month payment, I'm not going to give you a pre-approval letter when I know your payment's going to be way higher without first having a conversation with you.
Okay, that makes sense. And okay, so then after we discuss that $2,000 a month, you will give me kind of a breakdown on what $400,000 a purchase price looks like in payments compared to a $600,000 purchase price monthly payments.
Correct, and we're going to have a very open conversation. Like, obviously, a $600,000 mortgage isn't a $2,000 a month payment. We're going to be very open. I'm not going to let you get under contract and then be blindsided by a $3,500 a month payment because you're like, whoa, this isn't what we talked about. So we're definitely going to have a conversation. If you want a $200,000 or $2,000 a month payment, this is how much house you can buy. If you're comfortable spending more monthly, then we can talk about increasing your purchase price, because at the end of the day, it's not you or I that's making that mortgage payment. It is, whoever's buying the house.
Right.
So they need to be comfortable making that payment.
That's fantastic. Okay, so I feel like this is the number one question that buyers have. People who definitely haven't purchased yet and are hesitant to start the purchase process is how much that they are required to put down with their loan. So can you talk about, are there different amounts? Is there a certain required amount that somebody has to put down to get a loan to purchase?
And that's a great question, Ryan. I hear that question all the time. People aren't ready to start the process because they don't think they have the 20% down.
Right.
Here at Castle and Cooke Mortgage, we can do loans with as little as $1,000 down. So using down payment assistance, we have programs where you only need to bring $1,000 to the closing table, and even, you can negotiate closing costs, those seller concessions, those kind of things, so the borrower doesn't have to bring money. And that's where, working with an experienced agent like yourself will come into play.
Mm-hmm.
So there's really options. If you're a first-time home buyer, we can do a conventional loan with as little as 3% down.
Awesome.
If you are a repeat home buyer, we can do 5% down. If you don't want quite 5% down, we can do an FHA loan with 3.5% down. If you are an investor, typically investors think I have to have 20 to 25% down.
Right.
Here at Castle and Cooke Mortgage, we can do as little as 10 or 15% down.
Wow.
So there's a lot of different options when we're talking about what money you need to bring into the transaction.
That's awesome. So what are the pros and cons to putting maybe 3% down compared to 20% down?
So there always are going to be trade-offs. If you're putting 3% down, you're still going to have mortgage insurance. 20% down, you're not. 3% down, you may have a slightly higher interest rate. 20% down, you're going to have, better, lower monthly payment. So it's really just what everybody's comfortable based on their particular situation. And that's where when you get them under contract, I'm going to come in, sit down with the borrowers, give them, this is what putting 3% down, this is what putting 5%, this is what putting 20%, those different payment ranges, so the buyer can make that decision for themselves with where they're comfortable. Sometimes 3% is because that's what they have as far as to put money down.
Right.
But what I tell people is it's still cheaper than renting because you're building equity and you're starting to build some wealth for yourself versus renting where you're never seeing that money again.
That's exactly, I couldn't agree with you more, 100%. So what's the difference between a conventional loan and an FHA loan?
That's a great question. So there's a few different differences. Conventional loans are going to have a slightly higher interest rate because they typically have lower mortgage insurance. But it's also harder to qualify for a conventional mortgage. You do have to have a higher credit score. FHA mortgages, you can have a little bit more debt and as low as a 620 credit score. So there's just trade-offs and it's going to be based on each individual situation.
Awesome. So once I'm approved, I've gone all the way through, gotten you all my bank statements, you've given me the green light to go. What do I do next?
They're going to reach out to you. I'm going to reach out to you. We're all going to have a conversation. You're going to put them in the car and they're going to find the house that they want to make their home. You're going to submit that offer. I'm going to then get copied on that offer. I'm going to call that listing agent. Say, hey, Mr. Listing Agent, Ryan just submitted an offer over for Bob and Jane Smith at 123 Main Street. I wanted to tell you about the Smiths. They are 100% pre-approved with us. They have submitted all of their financial documents. We've taken a look at credit. We've verified that they have the funds in their bank. We are not going to have a problem closing our loan. What we're going to do is we're going to work together to make sure that Bob and Jane get under contract and buy that home because we're going to make it a team effort.
That's awesome. So this market has been a little bit tricky, and as most of us know, it's been a bit competitive. So does my approval ever have an expiration?
So it will expire as soon as something changes.
Okay.
So if you change your job, that pre-approval letter is no longer good. If you spend your down payment, that pre-approval letter is no longer good.
Okay.
So it's as soon as something changes, that's when your pre-approval letter is no longer needed. And you'll need to reach out and we'll need to just update everything.
Okay, that's fantastic. And then as far as closing costs, so what can I anticipate in closing costs? Now, they are, I feel like buyers don't always know, they are pretty negotiable in the contract. But as far as anything beyond their down payment, can you touch on that a little bit?
That's a great question. So closing costs are going to consist of title fees, which is going to be selected by the seller.
Mm-hmm.
And then any additional like insurance, escrow, those kind of things that we're going to set up. And the great news is we're going to sit down together, the buyer and I, and go over all of that so they understand what money they need to bring to the closing table.
Awesome.
Anything else, let's say they, want some lender paid closing costs. We offer that here. They don't have quite as much. Maybe take a little slightly higher interest rate, and the lender, myself, will pay some of those closing costs, so they're not having to come up with so much money. So there's different options just depending on what each individual person is looking for.
Awesome. That's fantastic. Okay, so then I've purchased a home. If I'm a buyer, I've purchased a home now. We've closed. I start packing my boxes and moving in. When can I expect my first mortgage payment to start?
So I always tell people, you move in, you're not going to make a payment that month. You're going to get a full calendar month. So if you move in the middle of the month, you're going to get the following month, and then you're going to make your payment. So let's say, for example, you move in January 1st. Your payment's not going to be due till March 1st because you're going to get all of January. Full calendar month is February. First payment March 1st.
Awesome. That gives them a little bit of time after putting that down payment down.
They're going to have at least a month of breathing room.
Yeah, that's fantastic. Well, I appreciate you taking the time to come out and talk to me and clearing up any questions that we had on how to start the buyer's process to get pre-approved, to start purchasing and really start wealth building through real estate and building equity. So if they have any questions, lending wise, to start getting pre-approved, how do they get in contact with you?
So they can always call me, call, text, email. My phone number here directly is 303-886-6619. You can email me, crichardson@castlecookemortgage.com. That's going to be the best way to contact me. Awesome. I'll always, reach out to you as well if I hear from anybody, so that way they know that they're moving forward in the process. Fantastic.
We will put Kristin's information in a link below. Thank you so much for being with us today and learning a little bit more on how to start the buying process. And if you have any questions, real estate wise, reach out to me. And lender wise, any loan approval questions, reach out to Kristin. Thanks so much for stopping by. Have a great day.